Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Brian Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Brian, it's great to see you as always. And it looks as if the Nasdaq-100 is a little bit behind the other major averages this afternoon.
Yeah, it's slightly underperforming today. As you noted last week, it's just been a lot of backing and filling in the NDX right around this 13,800 level. That's been the case for a couple of months now. So we continue to see some sideways chop, and we can look at the price levels of the charts to get a clearer indication as to what's going on.
Yeah, let's pull up your Bloomberg here and
yeah. So this here is actually the members of the Nasdaq-100, and we could see it's slightly in the red today. Weighing on it the most is Amazon. It's down about 2.3%, which is taking a hit of about 28 points onto the index. As you can see right here, though, Amazon just on Friday touched its all-time highs, which it has been in consolidation mode. Take a look here. I apologize. That's the NDX. But here's Amazon on Friday. This is a weekly candlestick chart. It touched its prior high, which it made back in September. So after this prior steep uptrend in 2020, Amazon's in sideways mode. So today's decline is really nothing too serious. Expected overhead supply kicking in along prior highs. If we look at the Nasdaq-100, we can see it's again in this sideways range, which it first reached a peak of back in mid-February around 13,880. And really, the range of the last few weeks has been 13.7 on the downside, and then resistance up around the 14,000 level. So sideways consolidation. That's the daily period. On the weekly period chart, we could see looks more like a cup and handle pattern, which is a bullish pattern. The range of the pattern is roughly, that's a percentage there. So the net range for the pattern is roughly 1,671 points. So that's pretty good upside. That's how we would come up with our upside measured move. That would take you roughly to the 15,600 level. That would be an upside projection if we can get an upside breakout here from this level, again, above that 13,880 or so. We look at the main groups within the Nasdaq-100. Technology makes up about 50% of the index. We could see it's pulling back, retesting the prior high. That's common technical price action. The consumer discretionary sector made a new intraday high today, so that's certainly constructive. And then communications is consolidating, I should say, this breakout from Wednesday or Thursday of last week. So all three of the main sectors within the Nasdaq-100, they make up about 90% of the index, all look constructive. And when we look at the longer term time frame of the NDX, looks constructive as well. Again, seems to me like a bullish cup and handle pattern. So at the moment, a lot of sideways chop, but in the bigger picture, I think things still look very constructive.
All right, Brian, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.